Well, let's get started here. Thanks everybody for joining. The February Canary Digital Fund update. We're also, of course, this is where we also talk about macro and crypto markets. So, first of all, our strategy at Canary in this fund is to make sure that we have great risk management. We have a lot of guardrails in place, both on the operations side and, of course, on the investment side. We look for opportunities in heavily discounted um, publicly traded funds that hold various crypto assets. That strategy has worked very well for us, from anything from Bitcoin related to multiple token related funds. We continue to deploy that strategy. Even today, there's opportunities here that we've taken advantage of based on discount to NAV. Of course, we're actively managed, and during times like now, we of course utilize a bond strategy to which at the moment, short dated U.S. Treasuries are the best investment in our opinion, while we're waiting out certain market volatility and certain market pullbacks. Of course, we've got myself and Josh, who've been running this fund since its inception. And we both have significant experience both in crypto and in TradFi. We're constantly looking at macro behavioral economics as well as fundamental and technical analysis. On to today's discussion. We're going to talk a little bit about macro, and then we're going to talk a lot about Bitcoin and other digital assets. So to kick it off, we will dive right into interest rates. I've said this on other calls and said this in other pieces that I've written, that back in December when the US yield curve uninverted, I didn't like the way that it uninverted. The long end rose as the Fed was trying to lower the short end. And what that tells me, the way that it inverted, is that we've got risk. The market expects risk, investors expect a higher risk. There's a sell-off of risk assets and an increase in buying in a flight to safety. It seems that markets are slightly negative. I don't believe that this is a recessionary year. I don't believe that equities are going to have a negative return this year, but things are certainly getting cooler, and that does bleed into crypto as well. Going to the actual yield curve, which is what a lot of people are talking about because it regulates risk. There was a lot of speculation that the Fed would likely lower interest rates two more times, and that's the short end, of course, lowering the Fed rate two more times this year at about 25 basis points a clip. Those projections are, I would say, getting a little bit more speculative, as the expectation that the Fed would lower rates has been pushed out slightly, and probably in the last half of the year. And it is possible that there might even be one rate cut instead of two. What we believe is that the Fed will likely lower rates two more times. We're not sure when just yet, but of course, the Fed is waiting for data around inflation and payrolls, which is what we're going to talk about next. First of all, inflation. The rate of inflation has come down significantly since 2020, 2021, 2022, but it's still a bit high. So, it's going to take a lot to get inflation under control. For the last 4 years, I've been saying that the only way to really beat inflation is by massive government spending cuts. And we're actually getting that right now. So I don't know if we're going to get enough in government cuts to actually ease inflation. It's going to be a very difficult road to get there. And but it looks like the current administration is dedicated to cutting government spend any way possible. So that's definitely on our roadmap of positives in the long run, but in the short run, it will create a bit of pain. So CPI will likely remain elevated until all of those cuts take effect towards the end of the year. So I do expect that inflation will be closer to about 3% for most of this year. Um, what would actually cause the Fed to lower rates, and they're supposed to only look at inflation data and unemployment data, but they also look at other data that could affect those two things. So unemployment is probably the biggest fear, which is what we're going to talk about next. These government cuts, along with a trajectory of cuts across the board in the private sector as well, will likely drive not only higher unemployment, but also, oddly enough, will solve for some of the inflationary issues. Um, we also look at what has happened since, the first event was the attempted assassination of Trump back this summer. That caused markets to rally because it created some certainty that he probably will be president. The election also caused a rally because now there is actually certainty. And then, of course, Bitcoin hit all-time highs right around the inauguration because now we're certain that we have a president in place, and we at least think we know what types of policy that that he'll employ. But post inauguration, there will be, and there has been from the last presidency some U.S. dollar weakness, which actually is good for our manufacturing sector in the United States. Um, so what are we looking at? We're our strategy isn't just to hold um, cryptocurrencies. We also have a barbell of yielding opportunities, and that's in traditional fixed income markets. At times, we will be 100% in crypto. There's likely no time that we'll be 100% in bonds, but we will be majority in bonds in different parts of in different parts of the cycle. At the moment, for instance, we're seeing great opportunities in bonds. We like to use this one ETF, the ticker's GSY, even though it's Invesco. Just a little bit of history. GSY actually stands for Guggenheim Short Yield ETF, which is actually an ETF that I created and launched and managed back in my Guggenheim days, back in 2012. So I'm very well aware of the strategy and how it works. At the moment on this short duration ETF, you can actually get a yield of, uh, you know, 4.7%. So we like that ETF because we can trade out of it very easily. It's got a very steady yield, and we're actually earning interest while we're waiting for markets to calm down. We also like short-term treasuries directly, although you can't quite get that type of yield there. The reason why you can get a higher yield in this than just short-term treasuries is it also includes some repos and other types of commercial paper that are AAA. And those are harder markets to access at our size. They're easier markets to access when when you run hundreds of billions of dollars. So that's one of the reasons why we like that particular ETF in our portfolio. And then, of course, we might go out to higher duration bonds, when we see the opportunity. But at the moment, I do like short-term or short duration bonds much better because we do have an expectation that crypto markets will rally soon, just not today. And we'll talk about that a little bit more later. Um, of course, when we're talking about bonds, we like to talk about where we are in that cycle. Bonds usually run in, about 30-year cycles. We've had a generational bull market in bonds that ended in 2016. Now you look at that chart and you're like, well, it looks like it ended in 2020. Well, if you look at the range and the pattern, it actually ended in 2016 at a low and then started moving towards the upside, meaning that that's when the bull market was over and likely marked the beginning of a 30-year generational bear market in bonds. Now, of course, and you can see in 2018 where we actually went out of that range because we were trending to the upside and or really into 2019. But of course, uh, COVID hit and it created a anomaly in this range, and you can see that anomaly through 2020. But you can see that the market for yield has quickly risen back up to a trending upward trend that started in 2016. So if you take 2016 as the bottom, and by the way, that's when I left TradFi because I was a bond manager and I noticed the bottom in 2016 and decided that crypto was the next cool thing.
I thought I'd throw in a TA slide real quick on the bond ETFs, just from a high level view, looking at TLT, IEF, SHI, AG, and using a trend determiner here. They look like they are trying to bottom, but they have not bottomed. And just looking at the beautiful fill there, known as the Ichimoku cloud. Some basic lessons here. Above, you're bullish, below you're bearish. Okay. And inside the cloud, you are neutral, non-trending, just chopping around. So in aggregate here, these are still trending bearish, trying to bottom. But internally, we have discussed, should the time be appropriate to trade around some of these higher duration positions as well.
Yep, that's exactly right. Well, let's talk about some bear market opportunities. Look, we don't believe that we're in a bear market in crypto just yet. It might feel that way because we hit all-time highs around January 20th, and that was only a month ago. And people have very short memories that we are trending upward. And the same exact thing happened 4 years ago, the 4-year cycle, where right around inauguration day of the last president, we were hitting all-time highs. And then we had a pullback into February before there was a rally into more all-time highs in April. So we actually have a belief that and we've got a piece coming out tomorrow that describes this a little bit more in detail, that the market is waiting for more certainty around Trump's policy. Now, the S&P is continuing to rally. I think that the traditional markets have a good handle of what to expect. The first tariff announcement caused all markets to crash. The second tariff announcement, okay, now we know what to expect. We expect tariffs, and you can trade around that. DeepSeek was, that announcement caused a lot of markets to crash, and sure enough, once people dug in and understood what was going on, they understood that, yeah, sure, the U.S. is going to invest heavily into AI and into data centers to support AI, and we know what to expect. We know, we know what to invest in. The issue that we have right now in crypto markets is there hasn't been a lot of action, but there's been a lot of committees formed. So the SEC, for instance, has a committee that's exploring creating a roadmap for digital assets and a decision-making tree on what's a commodity, what's a currency, what's a security. And until we actually get that, I believe that crypto is going to continue to be choppy because who knows what tokens to invest in until you actually have a roadmap of what the SEC is going to like and what they're not going to like. And I do believe that they're going to come out with that this year, which will cause markets to rally. By the way, Congress also has a committee. The CFTC also has a committee. So all of these various working groups will probably come to some kind of conclusion within the first 100 days of Trump's presidency, is what my expectation is. So I do expect a lot of chop. We're in a short-term bear market. not just in bonds, but also in crypto. So what are we doing? We're looking at opportunities, buying the extreme dips. We're holding a lot of cash, holding a lot of short duration bonds, looking for bankruptcies, looking for distressed debt, looking, we're constantly monitoring miners. There's a lot of different opportunities out there that we're evaluating and we're buying them on dips.
Bless you.
Thank you.
One thing I'll just add is when BTC was slightly less bullish earlier in this cycle, I guess 2024, there was a strong push on the NVIDIA AI HPC focused miners, specifically cores, that had a nice technical setup. It played out as expected, and it was uncorrelated to the BTC side of things. So we could continue to see that in a bear market. Something like MSTR is still at like a 1.8x NAV to assets, right? So that's not something now that we necessarily want to play around with, but in a deeper bear market, absolutely. And I also wanted to highlight we've got probably 10 companies that are IPOing at least this year on the crypto specific side. Mostly exchanges, Circle, BitGo, Kraken, Gemini. Certainly, I'm expecting in 2026, when we have probably a full-blown bear market, that a lot of these just sell off completely. I mean, look at most of the IPOs from last cycle to now. Robinhood is a great example of that, where it sold off, held a pattern at lows for a year or two, and then has rallied considerably. And now everybody loves it, right? But we are looking at some of this stuff ahead of time, and we're going to be ready to go in 2026 on these opportunities. And I guess I'll start here and take this one. There's a lot of bullet points here, but the takeaway is in 2024, we had very obvious catalysts that were clean and concise and had dates and finality. In 2025, like Steven said, we have a lot of questionable, nebulous, who's doing what when, what results will that be? So yes, 2024 was bullish. Yes, 2024 got us here. But most of those catalysts were very clear, especially Bitcoin having, when we're talking about specific dates around the election versus today when we have a lot of ideas so far. We also have, which I'll get to at the end of this, a lot of retail meme coin, player versus player, PvP, just fixed liquidity in the ecosystem that's just sort of sloshing around violently as people are extracting value and crashing these altcoins, which is what we're seeing. Prior to last webinar, it was the Trump coin. Prior to this webinar, it's the Libra coin out of Argentina that has been just a mess, so much of a mess that's crashed their stock market today. On the good news side, we do have states, pensions, endowments starting to buy BTC ETFs. I was surprised to see the number of state and pension funds that are buying MSTR, which is very interesting. We also have continued institutional flows through mainly the Bitcoin ETF currently. As far as the cycle is concerned, we are in year 3 of the cycle at this point. The question is always, is the cycle going to continue? What are we expecting? Are we going to still see cycles going forward? And I think it really depends on who's buying and why they're here. Previously, the previous cycles was mainly retail participants, mainly. Ideally, hopefully, as these cycles continue or don't continue, we see more institutional capital, we see more long-term capital, and we're already starting to see some of that. I'll talk about the notable 13F filings in a second, but there is certainly an expected positive return for this year and an expected negative return for 2026. Whether or not we see that, I don't know, but is it a self-fulfilling prophecy is the question. People are certainly on the retail side asking, when do we think is the top? Is it going to be the first half of the year? Is it going to be the second half of the year? Is it going to be into 2026? And a lot of people are trying to front run that, at least on the retail side, as the Abu Dhabi Sovereign Wealth Fund is buying BTC last quarter. Okay, so you've got interesting dynamic there. going on. And of course, this is correspondent with both the Bitcoin halving cycle and global liquidity, which is certainly still on the upswing. And in regards to the cycle, comparing the cycles, we don't have a lot of data. We don't have 25 cycles, right? But based on what we've seen in the prior two cycles, the 2015 to 18 cycle and 2018 to 2022 cycle, we are about on par with what you'd expect. We're not overperforming either cycle. This is certainly down slightly on the day today, but this tells me a few things. We're still in line with this elongated cycle potentially of the prior two cycles. We still have a little bit of time left, probably the rest of the year, potentially, right? And we're in like the seventh or eighth inning. I think Steven would say we're probably in like the ninth inning, but the point is there's still opportunity left in the market that we see, and when you compare to any reasonable cycle that we have seen. We also have a lot of headlines recently about a statewide Bitcoin reserve bill. There was a lot of hubbub, a lot of press around a Bitcoin strategic reserve leading up to the election during the Nashville conference in for Bitcoin. Bitcoin Magazine puts on a conference every year. Um, and lately we've been seeing these headlines regarding a Bitcoin reserve at the state level. Now, a lot of these states or their pension funds already invest or have invested in either Bitcoin ETFs or MSTR directly. So it's a little bit misleading to say, they're not in the market at all yet, because they are to some degree, some of these states. Let's say none of these pass, most of them get rejected. Okay, fine. I think it's likely that one or two of these actually makes it through. Utah, Arizona, I think they're the furthest along. I'm kind of surprised to see Tennessee not on this bandwagon yet, but I think a lot of this is just like signaling and not a lot of substance so far, but it's a start. It's something where right now we don't really have a lot of specific catalysts. This is certainly something the market can watch and look at. And if we start to see movement positively on this stuff, then the market may start to price that in, right? But we're not seeing that now. And I think Stephen is kind of negative on this idea of states buying BTC. But my point is, again, like from a retail participant versus institutional participant, the Wisconsin pension is doubling down on their Bitcoin ETF exposure. So it's a lot different than retail as far as that's concerned. Here's some of the notable 13F filings from last quarter. I think it's 100 million in total size as far as where you become reportable. Who really knows what most of these hedge funds are doing as far as, we can say they have X amount on a 13F filing or XYZ person has X amount, but right, we don't really know what exactly they're doing. Somebody like Millennium, they're known for a basis trade strategy, a net neutral strategy. So they're probably not net long, whereas the State of Wisconsin Investment Board, they're probably net long. We've had two pretty interesting additions last quarter, the Hong Kong Family Office Avenir and the Abu Dhabi Sovereign Wealth Fund. It's pretty interesting. Haven't seen that before. There were rumors of that happening, but it's good to see that on paper. A few banks sort of dabbling here and there in Canada and the UK, and the Tudor Investment Group also increased their holding quite a bit. And some other headlines that we've had recently, we're seeing movement on the custody front. We had the SAB 121 repeal that's going to allow banks to custody assets, and that's going to help compete with the current crypto custodians and just give more exposure and more access. We've also got the Czech central bank and GameStop, of all people, talking about a Bitcoin reserve. Now, it's funny to put those two next to each other, but certainly the GameStop example might be more like Tesla, where they are more of like fast money and they want a headline or something, right? Tesla, I think they sold a little bit of their holdings a couple quarters ago, but they still hold BTC. So even if we get a little bit of that fast money from GME, that can be backed up by the longer term investors like the central banks of the world or the sovereign wealth funds of the world buying BTC and helping just give this market a different alternative time frame to expectations. And looking at all of the entities, this is from a website called bitcointreasuries.net. The reported dates here aren't dates that the Bitcoin was bought necessarily, but when we look at who's holding BTC by sector, the ETF slice got much bigger over the past year, obviously. We're seeing more private and public companies report Bitcoin holdings, and the government slice is also something to watch, certainly. I looked yesterday, and about a third of total circulating supply, so there's around 18 million BTC circulating currently, 21 million by the time everything's said and done and everything is mined. And about a third of that has moved on chain in the past year. So there's really not a lot of movement for most of the coins most of the time. And again, if we're moving from Bitcoin holders to Bitcoin traders or speculators, then that should help stabilize prices a little bit. That should help dampen volatility if you're an entity here that's buying with a different outcome expectation. And there's been a lot of talk lately about gold versus BTC. Part of the reason why BTC also hasn't done so well recently is because of gold. We compete directly on both narrative and price. Gold typically leads the Bitcoin price. I'll take a look at that in a second by 60 to 90 days. So it's good to see gold as bullish as it is. It should be bullish for crypto down the line. And when we compare the issuance of gold or the inflation or the emissions, it's hard to know what word to put on that for non-crypto people. But the crypto people, it's issuance, it's inflation. When you look at BTC's inflation, it's currently far below gold. And I think it's important when we're thinking about the cycles that we've seen for BTC. In the 2018 bear market, we were getting 1,800 BTC per day minted. Now, those coins are in circulation, obviously, for the next bear market. But for the upcoming bear market, if we see it, we will only be seeing 450 BTC per day minted. Now, you can do some math on the notional stuff and you can justify, you need X amount of dollars to hold up price, assuming all BTC are sold per day, et cetera, et cetera. But on a unit level, we are not seeing that amount of BTC being brought into the market each day for the next bear market. So that is something to think about. That may also help dampen the downside. Historically, we've seen 60 to 80% downsides for a bear market. And here's the gold versus BTC relationship. If we look at the green dots there, specifically gold in the yellow line, BTC in the white line, gold has led BTC at the top. It's led BTC at the bottom. It even led BTC out of the chop that BTC was in last year. It moved before the election, gold did, and well before BTC started moving. It even front ran that global liquidity index in the red there last year. So again, to see gold as bullish as it is should eventually trickle its way to our end of the pond here on the digital side. A few quick slides here on technicals for BTC. Again, with the cloud, above we're bullish, below we're bearish. Inside of the cloud, we are neutral, we're uncertain. We tend to take risk off the table, and that's what we've done in the fund. And what we're seeing today is what you'd expect based on this indicator. I mean, it's as much as we want to be long and bullish, it just isn't the case here, obviously. And altcoins are amplifications of BTC. So if BTC is bearish, alts will be 2x as bearish as BTC. And looking at altcoins relative to BTC over the past 2-3 years, it just is a continuation of a bear trend there. So in the fund, we are very tactical and opportunistic and looking at specific alts individually, comparing relative values individually, and really thinking long and hard about whether or not a specific alt is even worth allocating into for a short period of time or a long period of time, because most of them are not keeping up with BTC on a percentage basis.
Yes, there are some exceptions to that, of
Yeah,
course. Any other coin that's not considered a security by the SEC that has a potential ETF in 2025 has performed quite well. So Litecoin is a good example of that. Litecoin has certainly made a comeback. The SEC, even Gensler's SEC, viewed it as a commodity, not a security. So Litecoin is certainly getting a massive pulse here. So are a few others, but there are only a few exceptions. Most of even the hot, VC-led tokens are doing very poorly, like Solana, for instance.
absolutely. And one thing I wanted to compare what we're seeing currently with Solana is what we saw in 2017 and 2018 with Ethereum in the ICO boom, a type of regulatory arbitrage where you and I could write up a white paper, ask for ETH, and individuals would buy ETH, invest in the idea, the ICO. And as the ICOs were coming to market, great, everybody's buying more ETH, everybody's bowled up, awesome. And the moment that stops, the moment the music stops, no one's buying ETH anymore. All of the ICOs were selling the ETH back into the market, and you saw a 95% drop in price. So what Solana's doing now is they're sort of speed running what happened to ETH in 2018 when we're seeing these meme coins, pump and dump coins, whatever you want to call them or consider them. They get a lot of activity. They generate a lot of activity. We can look at transactions. We're seeing a significant uptick in transactions monthly. We're seeing significant volumes monthly. I mean, I triple checked that monthly volume number. This is coming from Dune Analytics. A lot of that I'm sure is wash volume, but the volumes we're seeing on chain are significant, right? So it's getting a lot of attention. It's getting a lot of retail participants, but what it's doing is it's extracting value out of the ecosystem, and it is just it's not a good look for the digital asset space, right? Um, there's really no other way to say it. So Solana is certainly suffering. Everything around Solana and the Solana ecosystem is suffering. And altcoins that compete with Solana also tend to be suffering because everybody's moving their liquidity from one place to the other. So the casino is bustling, but this is the hottest of the hot money, the fastest of the fast money, and the opposite of what we're seeing on the BTC side, where we're seeing sovereign wealth funds and family offices. They are not on pump.fun trading meme coins, right? So it's really a tale of two markets here at the moment. And lastly, I'll just say thanks for participating. If you have any questions for us or want to contact us, that is our information there. And Stephen, do you have any last final words here?
I'm just going to say stop trading. Now's a great time to begin accumulating um, Bitcoin and a few others. But right now is not a great time to trade. So we're not really trading. We're slowly accumulating on big dips, and our expectation still is new all-time highs this year, and we're waiting for it. Thank you.
Excellent. Thanks, everybody.